Welcome to the Class Valuation New Hire Training Series. Our module today focuses on the residential appraisal forms. We will discuss the purpose of these forms and the role they play in the mortgage lending industry. Before we get started, if you're not already a subscriber to the Class Valuation channel, consider subscribing as it helps the channel out, and you'll also be alerted to the availability of new content. We do appreciate your support, and if you like this video, please remember to smash that like button below. At the direction of the Federal Housing Finance Agency, FHFA, Fannie Mae and Freddie Mac, collectively known as the GSEs, jointly developed the first UAD in 2010. The UAD is a standardized industry dataset for appraisal information that is communicated electronically through the Uniform Collateral Data Portal, also known as UCDP. The dataset is being updated to reflect changes in the appraisal industry, to address future appraisal needs, and to facilitate ongoing digitization in the appraisal process in the mortgage industry. Now, many of the appraisal forms that will be discussed in this module will be retired and replaced with a data-driven, flexible, dynamic structure for appraisal reporting in the form of a redesigned URAR. For example, in place of the general addendum, the new UAD provides a commentary field specific to each major section of the URAR, offering the appraiser ample room to provide additional information. An updated UAD specification timeline has not yet been determined. There is a published tentative timeline on both GSE's websites, which will include limited production in late 2025, with the new UAD required sometime in 2026. A link to the video on this topic can be found in the description below. The 100470 URAR, or Uniform Residential Appraisal Report, is a standardized form used by real estate appraisers for traditional appraisals of one-unit properties and units in PUDs, including those that have a legal or illegal second unit or accessory dwelling unit. This form requires an interior and exterior on-site personal inspection of the subject property by the appraiser. It is commonly used for mortgage lending purposes and is required by the GSEs, FHA, VA, USDA, and many other lenders on the secondary market when a borrower applies for a mortgage loan. This form also may be used for two-unit properties if each of the units is occupied by one of the co-borrowers as their principal residence, or if the value of the legal second unit is relatively insignificant in relation to the total value of the property, as it might be the case for a basement unit or a unit over a garage. It's intended to provide a detailed valuation of single-family residential properties. In addition, appraisals for units in condo projects that consist solely of detached dwellings, also known as site condos, they may be documented on the 100470, but only if the appraiser includes an adequate description of the project and information about the homeowners association fees and the quality of the project maintenance. Now, the 2055 is specifically designed for situations where the appraiser only assesses the exterior of the single-family residential property. The 1073-465 Individual Condominium Unit Appraisal Report is a standardized form used by real estate appraisers for traditional appraisals of a one-unit property in a condo project, and it requires both an interior and exterior on-site personal inspection of the subject property by the appraiser. This form is also commonly used for mortgage lending purposes and is required by the GSEs, FHA, VA, USDA, and many lenders on the secondary market when a borrower applies for a mortgage loan. The 1075 is specifically designed for situations where the appraiser only assesses the exterior of the one-unit condominium property. One of the efforts initiated by FHFA within appraisal modernization surrounds the valuation spectrum. Not all loans are the same, and neither are the consumers behind them. In order to facilitate alternative appraisal processes, The GSEs have aligned on forms for both desktop and hybrid appraisals. Now, a traditional appraisal assignment requires an interior and exterior personal on-site inspection of the subject property completed by the appraiser who signs the appraisal report. And the effective date of the appraisal is the date of inspection. A desktop appraisal assignment does not include field work by the appraiser. The 100470 desktop or the 1073-465 desktop form looks nearly identical to the 100470 URAR and the 1073-465 individual condominium unit appraisal reports, except for 4 additional fields used to report the assignment type, the property data collection method, property data collection date, and the property data collection workforce. Now, while there is no physical inspection of the property, the appraiser uses other sources that may include the MLS, public records data, or a prior appraisal report. At Class Valuation, we default to our Property Data Advantage solution to collect the property data and deliver it to the appraiser for their consumption to ensure a more positive consumer experience and reduce cycle time delays associated with the lack of data from the MLS and public records only. Now, a hybrid appraisal assignment for which the scope of work includes reviewing a recent report containing interior-exterior standardized property data in lieu of the appraiser performing a personal inspection. Again, the 100470 hybrid or the 1073-465 hybrid forms also look nearly identical to the 100470 URAR and the 1073-465 individual condominium unit appraisal reports, except for those 4 additional fields used to report the assignment type, property data collection method and date, and the workforce. And while there's no physical inspection of the property required in hybrid, the appraiser is required to complete some sort of virtual inspection using tools such as Property Data Advantage. The 1004C 70B Manufactured Home Appraisal Report is a standardized form used by real estate appraisers for traditional appraisals of one-unit manufactured homes, including those manufactured homes located in a PUD, a condo or co-op project, and MH Advantage or choice home properties offered by the GSEs. It requires an interior and exterior on-site personal inspection of the subject property by the appraiser, and it is commonly used, again, for mortgage lending purposes and is required by the GSEs, FHA, VA, USDA, and many lenders on the secondary market when a borrower applies for a mortgage loan. The 1004D 442 includes 2 different and distinct reports. The top section is used for an appraisal update, and the bottom section used for a completion report. The appraisal update section of the form is utilized in the real estate appraisal process to provide an update to a previously completed appraisal report. It's commonly used by the GSEs when the effective date of the original appraisal report is more than 4 months, but less than 12 months from the date of the note and mortgage. At this time, the appraiser must perform an appraisal update that includes inspecting the exterior of the property and reviewing current market data to determine whether the property has declined in value since the effective date of the original appraisal report. This policy applies regardless of whether the property was appraised as proposed or existing construction. The original appraiser should complete the appraisal update. However, lenders may use substitute appraisers. And when updates are completed by a substitute appraiser, the substitute appraiser must review the original appraisal report and express an opinion about whether the original appraiser's opinion of market value was reasonable on the date of the original appraisal report. The lender must note in the file why the original appraiser was not used. The validity period for FHA and USDA is 180 days from the effective date of the appraisal report, and an appraisal update may be performed to extend the appraisal validity period. Where the initial appraisal is updated, the updated appraisal is valid for 1 year after the effective date of the initial appraisal report that is being updated. Now, the appraisal update section of the form is used for all 1 to 4 unit properties for the GSEs, FHA, and USDA. When the previously completed appraisal report was reconciled subject to repairs or alterations, or subject to completion per plans and specifications, then the completion report or certification of completion section of the 1004D 442 is used to confirm that the required repairs or alterations outlined in the original appraisal report have been completed, or that the improvements are constructed and finished consistent with the plans and specifications used to form an opinion of value. The completion report section of the form is used for all 1 to 4 unit properties for the GSEs. It's only used for existing 1 to 4 unit dwellings for FHA and USDA. There are going to be circumstances where an appraiser will complete both sections of the report in one assignment, and that will happen where the client requires an appraisal update and a certification of completion. This commonly occurs when the subject to repairs or completion of the new construction build take longer than anticipated. If the previously completed appraisal report was completed for FHA or USDA, is a new construction 1 to 4 unit dwelling, and was reconciled subject to repairs or alterations, or subject to completion per plans and specifications, then the HUD Compliance Inspection Report 92051 is used to confirm that the required repairs or alterations outlined in the original appraisal have been completed, or that the improvements are constructed and finished consistent with the plans and specifications used to form an opinion of value. The 1004D 442 cannot be used under this circumstance. There is widespread confusion among both appraisers and underwriters regarding this requirement, and it is related to FHA retiring the inspector roster. The section of the FHA Handbook 4000.1 that is most referenced addresses the final inspection, completed in lieu of a certificate of occupancy, and that does not change the appraiser's analysis and reporting as required and documented by FHA. A Catastrophic Disaster Area Inspection Report, also known as a CDAIR or DAIR, is a specialized assessment conducted by inspectors and oftentimes appraisers following a significant natural disaster or catastrophic event like a hurricane, earthquake, flood, or wildfire. Now, these reports are essential for documenting the damage caused by the disaster and assessing the impact on the properties within the affected area. Observing exterior conditions and reporting what you see in a simple format is not an appraisal assignment because there's no value statement made. To be clear, the CDAIR is not an appraisal. Lenders and clients will sometimes request a 1004D 442 to report the same. This form is not designed for this use. Remember, the 1004D 442 is designed to provide a notice to the lender if the property has declined in value, or if the property has been completed per original plans and specs, or subject to repairs or recommended inspections. In either case, this is an appraisal report or an addendum to the appraisal report. Be aware that many of the E&O carriers who insure appraisers recommend that their policyholders not complete these assignments. Now, the reasons may include the type of coverage provided to the appraiser or the risk associated with assessing potential damage that cannot be readily observed from the street. The Fannie Mae 2075 Desktop Underwriter Property Inspection Report is used for exterior property inspections. When the property inspection requires the appraiser to report on the observed condition of the subject site, the improvements, and it requires an analysis and reporting of the current market conditions within the neighborhood, then the 2075 is utilized. There is no opinion of value provided, and it is not an appraisal report. The 2090 Individual Cooperative Interest Appraisal Report is a standardized form used by real estate appraisers for traditional appraisals of individual cooperative units. Cooperative housing, commonly referred to as co-ops, is a type of residential housing where residents own shares in a corporation that owns the buildings and land rather than owning individual units outright. This report requires an interior and exterior on-site personal inspection of the subject property by the appraiser. It is commonly used for mortgage lending purposes and is required by the GSEs or other lenders on the secondary market when a borrower applies for a mortgage loan. The 2095 is specifically designed for situations where the appraiser only assesses the exterior of the individual cooperative unit. The 1025 Small Residential Income Property Appraisal Report is a standardized form used by real estate appraisers for traditional appraisals of 2 to 4 unit properties, including 2 to 4 unit properties in a PUD, condo, or co-op project. This report requires an interior and exterior on-site personal inspection of the subject property by the appraiser. It is commonly used for mortgage lending purposes and is required by the GSEs or other lenders on the secondary market when a borrower applies for a mortgage loan. There is no form specifically designed for situations where the appraiser only assesses the exterior of a 2 to 4 unit property. The 1007-1000 single-family rent schedule is a form used in the real estate appraisal process specifically for appraising properties that are intended for rental purposes associated with long-term leases. This form is typically utilized when appraising single-family residential properties that are being bought or sold for investment purposes, such as a rental property. Overall, the 1007 single-family rent schedule is used to assist lenders, investors, and property owners in valuing the income potential in determining an opinion of market rent. It helps them make informed decisions regarding that investment strategy, the rental pricing, and the property valuation. To better understand the use of the 1007 to report on the potential income generated for a short-term rental, see the link in the description below. The 216998 operating income statement is a standardized form used in real estate appraisal and valuation processes. Specifically, it is used to analyze the operating income of the income-producing properties, such as rental properties of 1 to 4 units. The operating income statement provides a detailed breakdown of the property's income and expenses over a specified period, typically annually or monthly, and it is used by investors, lenders, and appraisers to assess the financial performance and value of that income-producing property. These forms are used to assess the accuracy of the data of an appraisal report and to form an opinion of the suitability of the appraisal methods and techniques that the original appraiser used. The 2010-1032 Field Review Form can be used for single-family properties, condominiums, and manufactured homes. And the 2000-A-1072 is used for 2 to 4 unit properties. The property under review may be located in a condominium, PUD, or cooperative development. At a minimum, the review appraiser must do the following: read the entire appraisal report under review. Inspect the subject property and comparable sales described in the appraisal report from the street. If the review appraiser inspects the interior of the subject, they must note that in the appraisal review report. Inspect the neighborhood in which the subject property is located. Research all appropriate data. Verify the data in the original appraisal report using all reliable sources. And assume the property condition reported in the original appraisal report is accurate unless there is evidence to the contrary. The 2006 desk review form can be used by an appraiser for the review of all 1 to 4 unit appraisals and does not include either an interior or exterior inspection of the subject or the comparable sales. This review is completed as the form denotes from the appraiser's desk. An enhanced field or desk review requires that the review appraiser add 2 alternate comparable sales. This is applicable regardless of whether or not the review appraiser agrees with the original appraiser's opinion of value. However, if 2 alternate comparable sales are not available, and it happens, then commentary as to why not, along with search parameters, would be necessary. The land form is a standardized form used by real estate appraisers for traditional appraisals of vacant land, and it requires an exterior on-site personal inspection of the subject property by the appraiser. It is commonly used for mortgage lending purposes, however, few lenders actually lend on vacant land. An article from LIA Administrators and Insurance Services states that for many appraisers, the biggest nightmare of their career begins when someone requests a vacant land appraisal. The problem is, the appraiser doesn't even know the nightmare has begun until the appraisal is complete and the claim has been served. In fact, too many appraisers accept vacant land assignments when they lack the experience to approach these assignments correctly. Now, the form is simple enough, and many of its components resemble the 100470 or the 1073-465. Most claims arising from vacant land appraisals are caused by the appraiser appraising the wrong property or parcel misidentification, such as determining the access. Make no mistake, land appraisals are complex assignments, and no appraiser should take on an assignment to estimate the value of vacant land without the requisite experience and unless willing to do the level of research necessary to complete the assignment. The 1004MC Market Conditions Addendum was introduced in 2009 by Fannie Mae and Freddie Mac. The purpose of this addendum is to provide the lender client with a clear and accurate understanding of the market trends and conditions prevalent in the subject's neighborhood. This addendum form was required for inclusion in all appraisal reports delivered to the GSEs, FHA, and USDA. Fannie Mae and Freddie Mac removed the requirement in 2018, and FHA and USDA removed the requirement in 2023. There are still lender clients that require the 1004MC as an overlay, and that is perfectly acceptable. And because the respective selling guides from the GSE still hold the appraiser responsible for analyzing market conditions and accurately reporting them in the neighborhood section of the primary forms, and because many appraisers are form-driven, you'll find many appraisers still incorporate the 1004MC in all of their residential appraisal report forms, and this too is acceptable. The Real Estate Owned or REO Addendum is a form used in real estate appraisals to provide additional information about properties that are owned by a bank or a financial institution as a result of a foreclosure. These properties are commonly referred to as REO properties, and the form is designed to convey the subject's competitive listings and an itemized list of repairs and estimated costs associated with the property, which is typical for a foreclosure, especially for those that sit vacant for an extended period of time. The number of appraisal forms available to an appraiser are numerous. The forms discussed in this module are the most commonly used forms used in the real estate mortgage financial transaction market. Alternative forms and addendums could include a 1033 one-unit residential appraisal desk review, a 2065 desktop underwriter qualitative analysis appraisal report, a 2070 Freddie Mac condition and marketability report, a 71A or 71B residential income property appraisal report for properties with 5 to 8 units, a condominium project addendum used for manufactured homes located in a condo project or for a site condo when the 1004 URAR is used, a draw inspection for new construction, and general purpose appraisal reports, also known as GPARs. They mimic the traditional forms, which are intended only to be used by a lender in a mortgage financial transaction, that are discussed for single-family condominiums, manufactured homes, and 2 to 4 unit investment properties and or vacant land. Well, the GPAR can be used with a scope of work that includes a personal inspection of the interior and exterior of the subject property, but it can also be restricted to an exterior inspection only or no inspection at all. These forms can be used for assignments where a lender is not involved, and because the form allows the appraiser greater flexibility related to the scope of work, it can also be used by an investor not selling to the GSEs, FHA, or USDA. And a supplemental value addendum most commonly used in an as-is and as-repaired value appraisal report, also known as a to-value appraisal report. Well, this addendum allows an appraiser to document two sets of comparables and report two separate opinions of value in the same appraisal report. Today's video cannot be possible without the use of these trusted sources. We encourage you to view the remaining videos in this series, and don't forget, if you're not already a subscriber to the Class Valuation channel, consider subscribing, and if you like this video, please remember to smash that like button. Thank you for taking the time to check this video out, and have a great day.